One of Wall Street's biggest short sellers is rewriting Snapchat's story. He just published a positive report on the company, issuing a $17 price target. Joining us now is Citron Research founder Andrew Left. Andrew, great to have you with us. I mean, you're pretty well known for picking out some great shorts out there, and by your own admission, the last 4 months have made this a really great short. What's the story here? You're saying ultimately expectations can't get any worse, and all the bad news here ultimately is in the price.
Well, you look at a stock with 21% short interest, and you say, have the shorts overplayed their hand? And in this one, at these prices, I think absolutely. If you want to compare it on any metric to Facebook, or let's just say Twitter, daily active users, 2021 enterprise value to sales, whatever you look at, you'll see that Snapchat has gone at IPO from the most expensive of the social media stocks to now the cheapest of them. But at the same time, they've captured more of the zeitgeist. And that's where I think it's being lost on Wall Street right now.
They've captured more of the zeitgeist, and part of that is because of their small but very engaged user base as well. The pushback, though, is that this user base can be fickle. They're young, right? So the minute a new platform comes along, they might flee to that. It's fatty, or it could be considered.
I mean, it's more of a worry for, Facebook's a $500 billion company, and what would happen if they didn't buy Instagram? It would have just been amazing. So yes, I understand they're fickle, but actually the amazing part about it is Generation Z, where whenever you hear Zuckerberg talk, you always hear the word sharing economy. Gen Z is more about the privacy. And the privacy is very important to them. I'm not talking about privacy factors like you saw with Cambridge Analytica, but I'm talking privacy that when I post something, it disappears, whether it be a picture or a message. And Snapchat pretty much has that market with them, and that's why they are so dominant with that Gen Z. And it's really the only way to reach them. Imagine one company that's a complete bridge to a generation. When people start making their purchasing decisions for lifelong, for how they're going to start buying things, it's amazing, and they hasn't lost it. And true, the redesign was almost a test. And let's see how sticky this really is. And yes, it was a disaster, and everyone knows it. Yeah. It was, no doubt. And the conference call was just terrible, but they did not lose their core user base. That's what's important.
The skeptics here say, look, whatever these guys do, ultimately Facebook steals it. They've got a bigger audience. They ultimately do it better. But I do want to pull out one line that you haven't said, and this is important. Facebook is valued at $345 per daily active user. Snap at $63 per daily active user, which for me stood out quite spectacularly.
I mean, it's compelling. Here. Look at it this way. Google offered in 2016 $30 billion, well, it was rumored, let's just say $30 billion for Snapchat. And since then, the business has accelerated, the daily active users have accelerated, and right now, ex-cash, you're looking at maybe $12 billion or $12.5 billion company. So, yeah, I mean, it's become, investors have lost confidence. The best decision I should have made is to probably let my teenagers manage my portfolio over the past 3 years. I would have done a lot better. And the only stock that they probably would have been down on right now would have been Snapchat. And with that, I don't think they're wrong. I would think maybe it's just time to buy more.
Andrew, what % of your call is predicated on Snap being acquired? If not by Google, then by someone else?
You said something very interesting, which is Facebook will just knock anything off that Snapchat does. So whenever you have a company the size of Facebook who's so dead set on killing a company like Snapchat, that's a $12-13 billion company, it only imagines which white knight, whether it be Apple, whether it be Google, would like to come in, take this over, and come on, Facebook, now let's rumble. So I think there's a good chance. I mean, they are sticky. They are there. They spend a lot of money on R&D. They spend a lot of money on augmented reality, which has paid off more than Facebook's virtual reality. It just has to mature. I mean, look, Uber's been a private company for the past few years, had ups and downs, been able to work it out, and sure enough, now they say we're going to go public next year. Snapchat, unfortunately, has had to work these ups and downs out in the public marketplace.
They've also hemorrhaged staff. I mean, we can look at just in recent weeks, the Vice President of Sales Product Engineering, the CFO, the head of legal. So you've got a very junior
they actually brought
team.
on a better CFO. They brought on Tim Stone from Amazon, who I think is going to be, a CFO in this organization is probably one of the more important people. And I think Tim Stone, who helped integrate Whole Foods into the Amazon, will be a big positive and bring those grown-ups that everyone said is so desperately needed. into the Snapchat culture.
So what about profitability then too? Because for advertisers here, you've got the duopoly that is the likes of Google and Facebook ultimately. And if you want to try and tap into that market for advertisers, you've got a situation here where ultimately the content disappears. They don't have the same kind of data provision and collection that those two big guys do.
I know, and that's a good thing, and that's a good thing and a bad thing. You know, it's funny, for everyone who thinks that Snapchat is only for Gen Z, I think they have like 450 different categories that they offer advertisers. Advertisers will follow the eyeballs. If you go read the report, there's plenty of documentation from marketing weeklies and ad weeklies discussing what Snapchat is on their entertainment platforms, how you have to be there. And I think you'll see that monetization seriously kick in. Not to mention, Spiegel mentioned he expects profitability, I think it was at the end of this year. So I can't comment on that, whether they do become profitable or not. But you're looking at a company that if you're going to worry about one quarter or the next quarter profitability, this is a much bigger picture than that.
Yeah.
What about strategy? We talked a little bit about M&A possibilities. In your report, you make a link to Fortnite, which is the game that's taken over every teenager's mind. Tencent owns a stake in Snap. Tencent owns 50% of Epic Games, which created Fortnite. Are you saying investors should price in some kind of synergy between Fortnite or Epic Games and Snap?
That would be a stretch. that would be a stretch. And I wouldn't want to be dishonest. My point is that Tencent said they're going to help Snapchat get into a video game. Now, when you have this generation and you see the importance of gaming to this generation, and then you see Tencent's foothold into gaming with Epic Games, if they sat and they worked with Snapchat to start monetize gaming, that's something that they're in position to do.
So what ultimately could happen here that breaks the thesis, Andrew? I mean, I know you're saying, okay,
well, here's the beautiful part about it. There's so much negativity on the stock.
Yeah.
All you need to have is a stable quarter, and I think you can see 30%. What other stocks, if you look where Facebook is trading, where Netflix is trading, where Google, Amazon is trading, what's it going to take for these stocks to go up another 30%? Where if you look at where Snapchat is, I think right now, if you get a stable quarter, if you see that, okay, the financials are getting better, that they're able to go ahead and bring in some of the spending and go to the programmatic advertising that they're doing and bring it on that platform, you know, and that's been the growing pains. I think first bump, you get 30%, and then it goes from there on in.
You know, Andrew, I don't think I've ever seen you so lively. I think you should go long more often. Dump the shorting.
I think my wallet thinks I should have also over the years, but no, that's okay. Listen, when I see an idea and I think it's a good idea, it is what it is. With a 21% short interest, I would love to hate the stock. Trust me, I would love to look at it and say, oh, this is a dog. And I know I'm going to get plenty of emails saying, Left, what are you doing? What are you talking about? And that's fine. I just need this company not to implode. I need Evan Spiegel to go ahead and go on script, next conference call, and that's it. And you know what? And the teenagers will do the rest. The kids will do the rest.
We get it. Andrew Left, Citron Research founder, thank you so much for speaking to us today.